Yeah, Gary, that's interesting because yeah, my stepdad and Rainwater were friends. They went to high school together, so got a lot of interesting insights there. And yeah, Larry Ellison, he's margin stock to buy the island and all his houses. So what happens? What when the stock gets so low and they have to do that? One of the saddest stories of 2008, and there was a lot of sad stories. Do you guys was it Green Mountain Coffee? So Green Mountain Coffee, and again, these are just ballpark, went from 150 to like 10, and the founder had margined all his stock to, buy his dream, essentially fulfill his dreams. It went to 10 because he was forced to sell all of it. And then from there, it bounced back up and got bought by Coca-Cola, and he didn't participate in that because he got margined out. This is what happens when you load up on a lot of debt using leverage and you can't get out. Okay. So how do you trade this? And again, this is just from my experience and mistakes trading in 2000, finding what worked in 2008 after trial and error. And as you can see from my trading account, really capitalizing on the volatility that we're having here. So the question is, how do you do it? First, you do have to reset your mind. Okay, this is not, as the saying goes, this is not, this ain't Kansas anymore, so to speak. Things have changed, and it is critical to acknowledge this. As the saying goes, the skills that got you out of Egypt are not in any way, shape, or form the same skills that will take you to the promised land, okay? So first you have to reset. What used to be a 3-week move off of a daily signal is now a 1-hour move off a 5-minute chart. What do I mean by that? What I mean by that is before, where I'm just going to pick a stock, Apple. Apple might move $10 over the course of 3 weeks, okay? So you'd get in it off a daily signal, you'd be in it for week after week, you'd hit your $10 target, you'd get out and you'd be happy, all right? Apple moves $10 now in less than a day. That's what I mean by that, okay? Compression. So this is very huge and very important to understand. If you are trading the same position size today that you were trading a month ago, I'm guessing you're having a hard time in this market. You have got to reduce your position size just to stay in a trade, okay? The average true range now has exploded. If your stop loss is within the average true range, guess what? You're going to get stopped out. So as a rule of thumb, if the VIX doubles from 15 to 30, cut your position size in half and double your stop. You're risking the same amount of money, but you're able to withstand the new normal swings. In this case, the VIX has gone up 5-fold, which means you should trade 1/5 your normal size and have 5 times the stop. Okay. Now, is that a hard rule? No, but it's, again, to give you an example of, if you're trading the same size you were trading in February, it's probably impossible for you to hold on to a trade right now or sleep well at night because of the fluctuations. Trade smaller, expand your stop loss, you're risking the same amount of money, and you can trade much more relaxed. And in an environment like this, it's the ones who are trading relaxed are going to make money. The ones who are trading panicky are not, okay? Because you're just going to be freaking out, which is tough. Now, once you get your position size right, we were talking about this today too. Here's another trick, and I've done this for 15 years. I hide my P&L, okay? So what do I mean by that? If you've got a position on, your P&L is going to be fluctuating up and down, and it can be distracting. Oh my God, you're up 1,000, you're down 1,000, I better get out. And instead, if you got your position size right and you have your plan, just don't watch the P&L, okay? Because the P&L will mess you up. Not maybe, it will mess you up, and it will force you to get better about your position sizing and defining the trade, okay? We'll talk about that. But it's something that I do even today. I don't look at my P&L during the day. I am aware that I'm not going to let my account blow up because I'm aware of my position size. I'm aware of my stop loss, which I figure out beforehand. And after that, I just let the market do its thing. I release my attachment to the outcome and let the market do its thing because I have confidence that over time the setups work. Okay? And it's a huge, huge thing in there. Hide the P&L. How will I know when to panic and exit? I mean, yeah, it's funny, right? Okay, so to hide the P&L, what I do is I used to tape like an index card to my computer, and I would just move my screen over there. With Thinkorswim, I usually pick 1 or 2 windows to be always on top, and I just place it over. Now, obviously, I'm not betting the farm and being irresponsible, but again, the P&L fluctuations will mess you up. They will mess you up, no question about it. Okay, clockwise or counterclockwise. Now, next, I have been in 90% cash overnight since the 3rd week in February. I will show you why in a minute. And over the last 10 days, I've been going to 100% cash overnight. Most of the time, like 4 nights out of 5. Why? Because of limit moves. This is not a market where you want to spend your day digging out of holes because of big moves against you. Instead, you want to be in the position of being able to take advantage of opportunities. This means trading less and being patient. One good trade a day can make your week in this kind of environment. The analogy I like is, and again, my drawing skills are horrible. They peaked in 3rd grade. So if you think of a cat sitting there watching a bunch of birds over here in the corner, and he's just waiting for one to get distracted so he can dive in and pounce. That's your job as a trader, okay? Your job as a trader is to look for those opportunities where you have an edge, be quick and pounce, come back, eat your meal, and wait for the next one, okay? One good trade a day, one good trade a week can make your account, okay? Just remember that. In addition, it is critical to take care of your mental health. It is very difficult to sleep well in a market like this if you have a lot of positions on, and if you are tired and stressed, you are not going to make good decisions. Flat is the new spa treatment. I haven't gotten a massage in a month because when I go flat, that's the same thing as having a massage. It really does fully relax your mind, and you've got to be in a relaxed mindset to be able to make good decisions in this environment. Use it to cleanse and relax your mind so you can pounce on the opportunities when they come. Otherwise, you're going to be a hot mess, and you ain't going to make money in this market if you're a hot mess. Next, stop thinking logically. Things like, this is really cheap here, it can't go down anymore. We are not in a logical market. We are in a market called margin call market. Think about it. If you are in a margin call, are you thinking logically? Most people, when they're in a margin call, do not add money into their account. They panic, they pray, they hope the market's going to go up and take them out. When it keeps going against them because of other margin calls, they finally panic and get out. That is the environment we are in, okay? This is not logic. This is panic. This is not a market that's moving because it wants to. It's moving because it has to. And you've got to remember that, okay? There's no logic about what's happening in this market, and there's not going to be any logic for anytime soon. And I already talked about Disney getting as low as $15 because of margin calls. Las Vegas Sands got as low as $1 from 110. Okay, that's the kind of stuff that can happen. Focus on the price action and the specific signals, and remember that the movements are forced. They're not logical. Imagine if you just play a recording in the background of people screaming, that'll give you an idea of what's going on behind the scenes in this market, and that will probably help you make better decisions, although it will drive you crazy after a while. What I have found personally is that the best times to trade have been the first hour and the last hour. I typically in the afternoon like to go flat and relax and go for a walk. Cash is a position. Use it wisely, okay? So what are some examples of some trades and in this market? So on February 24th, I set up this trade in the NDX. It was a 20-lot trade where I sold wide call credit spreads using the options, and you can see here that they basically expired worthless. It was a nice 6-figure trade, and it was super low stress. This was back when the NASDAQ was at 9,000, okay? 9,000. Remember how long ago that was? Not that long ago. So why did I do that trade? All right, so this is a very, very important chart. This is what basically tells you what's going on behind the scenes, and we are, you took that one, nice, Jack. So this is called the put call ratio. It's the combined index to equity put call ratio. Now, again, very simplified. If we're down here, it basically just means that everybody's loaded up on calls, and if everybody's loaded up on calls, that also means that everybody's loading up long stock. If everybody's long stock and there's no one else left to buy, what happens is that the market starts to trade sideways and then starts to drift down on stop losses, okay? It takes a tremendous amount of energy for a stock or a market to go higher. All that it needs to fall is a lack of buyers. Now, in this case, this was a normal pullback, okay? That was a normal viable pullback. We sold off, great. And what happens is when people start to panic, remember when people would panic at a 5% decline or a 3% decline? Everybody starts loading up on shorts. This shows that there's too many puts being bought. If people are buying puts, they're also shorting. And when it gets like this, you want to be buying. Boom, we bought them. Okay, same thing here. Okay, so now here we are, February 20th. Here we are down here again. It shows that everybody's long. Okay, in this case, if everybody's long, the signals I like to use here is, first of all, you got to be hedged, you got to be light, because you're looking for, at a minimum, a pullback, to the mean. And if you got options, you don't want to hold through this. Now, did I know at this point that the market was going to fall 30%? Absolutely not. But did I know at this point that the odds of a normal pullback were high? That's why I sold the call credit spreads. That's why I took profits on my longs. And that's why I picked up some short positions. Yes. Okay. Did I get out of them way too soon? Yes. So now we're at the opposite. We're at extremes where hard bottoms can happen. Okay, but we don't have any technical signals here. So this is, again, just to keep in mind, this is kind of the thing where, at some point we're going to get there again, and it will be a great time to short again. Okay. Okay. So what are some examples here? So I talked about, 5-minute charts having the same moves that used to have weekly charts. So here's a 5-minute signal. Okay, I'm not going to get into the signal here. For those of you that know this is a Squeeze Pro. If you don't, I'll talk more about that in a second. But the idea here is that in 5 minutes, the Qs go from $210 to $216. That used to take like a month. Now it happens in an hour, okay? So in this case, I just bought 2,000 Qs. I made the move. I made 13 grand, and I was out. Okay, so again, this is just an example with stock. You don't have to buy options. You don't have to buy futures. There's plenty of opportunities here. I was in, I was out, and I was done. Now, I also did a similar trade on the futures. Okay, on the NASDAQ futures, this was a huge trade. It was a nice 6-figure trade. Does this happen all the time? Absolutely not. This is what I mean by being in cash and being patient and waiting for those opportunities. If you're an active trader, these are possibilities that take shape if you know what to look for. Here's Google just buying the stock. Again, you can buy, you don't have to buy futures. You don't have to buy currencies. Oh, look at Google has a trade here, and it went up $50 in 20 minutes. So that's the kind of stuff that can happen in this market if you know what to look for and you know what to be available. Is swing trading dead in this market? Robert, in my opinion, yes. In my opinion, you got to be really careful holding on to trades for a couple of weeks. Will there be opportunities to do that? Absolutely, yes. In fact, well, I say swing trading is dead, but I want to show you some trades I'm setting up literally right now for swing trades on currencies, on currency ETFs. In this environment too, my youngest son, he's 10, he likes trading. I'm having him trade in this market, okay? He likes to make money so he can buy Skylanders and Robux. So in this trade, he made $353, and he ordered, a bunch of Skylanders on Amazon that showed up in the mail. So you can have signals that are fairly simple, but you just got to be patient and you want to wait for them. Okay. Okay. In addition, in a normal market, okay, I will normally have 7 to 10 positions, generally allocating about 5% of my account to each position, okay? So if I have 10 positions on and we're trading options, that means I'm 50% committed to trades and I'm 50% cash. That gives you an idea of the position size that I typically use. And I'm typically holding overnight. I want to hold on to trades for a couple of weeks, okay? And I'll mix it up. I'll have what I call market-sensitive longs. Amazon is a good example of that. If the NASDAQ goes up, Amazon's going to go up. If the NASDAQ goes down, Amazon's going to go down. But I also like what I call honey badger longs. Tesla and Virgin Galactic are good examples of moments in time for these stocks that they were doing their own thing. They did not care what the indexes are doing, and in fact, oftentimes would move up on days when the indexes move down, and I would have a few hedges. Okay, so what would that look like? So this would be what I would call a typical portfolio in that environment. So on this day, you can see that I was losing money on Beyond Flesh, and I was losing money on Shopify. Okay, they were going down. Tesla, I didn't have much of a position on there. And then I think that was a short on the ES, puts on the Qs, and then my big trade was on TDOC. TDOC was a honey badger, and that stock just flew that day. Okay, so that's an example of kind of a balanced portfolio of from three weeks ago-ish, or give or take. But what am I doing now? Because things have changed. Now, when we start seeing limit down moves or the VIX goes over 40, I do change my trading approach drastically. Okay, as I said before, I'm generally going to 100% cash overnight. From there, I stop. So remember earlier I talked about preserving your brain. Okay, so here's how I preserve my brain in this environment. I stop wasting time looking at stock charts. It's basically worthless, okay? Because all that matters right now is the indexes. So go the indexes, so go 97% of stocks in this environment. Now, don't get me wrong, there are going to be stocks out there that are doing their own thing. A good example is Zoom. I'll talk more about that. But most stocks are going to move with the indexes. And if they are moving with the indexes, I promise you, it's going to be easier to trade the indexes. Why? The indexes are going to be way more liquid, have more expiration dates within options, and they're going to be able to trade overnight. So you can get out overnight. In some cases, obviously, like spider options, you can't trade overnight, but you can trade until 315. I basically stick to two indexes. Screw the Dow, screw the Russell. You can trade them if you want to, but the S&P 500 and the NASDAQ 100 will give you all the trading opportunities that you need. You do not need more than that in this environment, okay? So when I say the S&P 500, what I mean specifically by that is the spiders. I will trade the actual ETF as well as options on the spiders. I do like the S&P futures, the minis and the micros, as well as the ES options. If you've never traded futures before, I don't recommend that you start in this environment. Stick to the spiders and SPX options. The NASDAQ 100, I'll trade the Qs, the ETF as well as the options, the NQ futures, mini and micro, as well as the NDX options. Again, not the time to start trading futures if you've never done that before. In this environment, you will find all the opportunity you will ever need just focusing on these, and you're going to save a lot of mental bandwidth not researching stocks. I promise you, having done this all through 2008, you do not need to find individual stocks to trade. If a stock moves with the market, just trade the market. I promise you it's going to save you a lot of time, and they're easier to trade, okay? The other thing to keep in mind is that there's going to be some massive down days, and in a normal market, so all stocks, there's a concept called reverting to the mean, okay? Reverting to the mean, and the mean, of course, is the average price. In a normal market, that mean is the 21-period exponential moving average. Nice trending up move. Any move to the mean is a buying opportunity. Buying opportunity, buying opportunity, buying opportunity, buying opportunity, buying opportunity, okay? Now, once things go ballistic like this, the new mean is the 5 EMA, okay? The one thing you want to be careful about here is like, oh my God, this market, the world's falling apart, I'm going to short. You're going to get your head ripped off because we're going to revert back to the 5 EMA. Oh my God, I got a short, head ripped off, okay? Today I was buying. People are like, why in the hell are you buying this? Because we're going to revert back to the mean. We always do. Now that we're at the mean, what do we do from here? Well, unless it can break through this, we keep heading lower. All right. I think maybe we could get up to the 8 EMA here. We'll see. But just keep in mind that the new reversion to the mean is the 5 EMA, and don't short when it's extended. Okay. Bear market rallies are the best. Notice this. See this long, slow rally that puts you to sleep? In this environment, that happens in one day, okay? Just keep in mind, if we're extended from here, you got to focus on the long side, and if we're rallying up here, you focus on the short side. The 5 EMA is your friend on the daily chart, okay? Yeah, the daily chart. Just look at it on the daily chart. I look at other time frames, but that's your guideline, okay? If we're too far extended to the downside, and in 2008, this happened time after time after time, the moment it looks like the world's going to end, you get a rip covering rally, okay? Somebody was asking me today, well, who's buying this? People that are covering their short positions, okay? You just have to trust me on this. the market's not going to go to zero, okay? It feels like it's going to someday, but it's always going to revert to the mean, and even if it's a stair-stepping its way down. Okay, so how to trade this. In addition, on the long side, I will look for stocks bucking the trend. Good examples right now are Zoom, Peloton, DocuSign, TDoc, Walmart, CTXS, I think that's GoToWebinar, and Coop. These are all stocks that are doing great in this environment because people are forced to stay home. And if they're going to stay home, guess what? People are canceling their gym memberships. So they're going to talk to people on Zoom. They're going to work out on their Peloton bike. They're going to sign documents by email, TDocs Medicine. They're going to order online at Walmart, you know, et cetera, et cetera. Those companies are fine. I'm fine. In fact, I'm long Zoom overnight tonight. So because I'll show an example of that. But if you're thinking of buying Apple, why not just trade the Qs? It's easier and they will move together. Now, Apple's probably a bad example. Apple's a liquid option. But again, the point is trade the index. If the stock is going to move with the index, trade the index. If you're now today we did buy some Amazon simply because the NASDAQ was down 6% and Amazon was up on the day. Amazon was obviously bucking the trend. Walmart was bucking the trend. So you want to look for that as well. But if a stock is down 5% and the indexes are down 5% and you're thinking of buying for reversion to the mean, buy the index. I swear to God, it'll save, and I swear it will save you so much time and anguish and frustration. Okay, so they will move the same and they're much more liquid. It makes your life easier and it's easier to get in and out. And as a bonus, the options on the Qs and the spiders and the SPX expire every Monday, Wednesday, and Friday, as well as the ES. So there's a lot of opportunities there if you are a student of options. Okay, so here's Zoom. This is from today. I love this. This Zoom doesn't care that the markets are going to hell. This is my definition of a bullish stock. The 8 is above the 21, which is above the 34, which is above the 55, which is above the 89. I think Zoom could make new highs here. I love this stock. That looks great. That stock doesn't care that, you know, there's some issues in the stock market. Okay, does that make sense? So I'm defining this by the pattern itself versus, you know, we looked at the NASDAQ here. You know, this is an example. This is not, you know, this is not a stock with a lot of demand. Back here, the NASDAQ had a lot of healthy demand and all the moving averages were stacked positive. Right now, of course, it's the opposite, but Zoom has healthy demand and we can respect that. Okay. So my biggest day, and I think in the email we sent out, we talked about, hey, in a market like this, there was one day where I made $349,000. So this was that day. So what did I trade? So now, believe it, well, irony, I was down on Zoom on this day. I was down on DXCM. I was down on the Qs. I was down on LK. Had a small profit on JD, some profit on Walmart, TDoc, Amazon, S&P futures, nice, Netflix, nice, NASDAQ futures, nice, and then I had 100 options on the spiders and the spiders went up 15 points or something like that. So that was my $349,000 day. And again, I started that day mostly flat. I think I was 98% cash overnight. So again, those are the kind of things that can happen if you're ready for them. Yeah, one of your daughters is going to school tomorrow via Zoom. Yeah, I mean, so it's crazy. Okay, so what is this? Oh, while I was doing the webinar tonight for you guys, I did this trade. I'm sitting there, I'm preparing for this, and an hour before the webinar, I got a 5-minute squeeze. Now, it shows here that I was up $20,000, and I didn't get out there. I got out, so I closed it out. I trailed a stop. So I made $14,000 on the NASDAQ futures while I was preparing this presentation for you guys, and I made $23,000 on the S&Ps. That's where I got stopped. Now you'll notice here that I was up more. So I was up $30,000 when I took the screenshot, but again, fair disclosure, I got stopped and I locked in $23,000. So while I was preparing for the webinar tonight, I did book $33,000 in gains, just waiting for that opportunity. Now that's a short squeeze there. At this point though, again, I want to get some sleep tonight, so I'm not going to take another trade. But again, just to give you guys an example of kind of those quick hit and run trades that set up in this environment. Okay, so if all of this is new to you, for better or worse, I've lived through multiple market crashes and recessions. I've seen what this market can do. I've made every mistake in the book. I still make mistakes, but the good news is when you make a lot of mistakes, I'm pretty good at not repeating them. My mission in life is to prevent as many people as possible from making the same mistakes I have made. Honestly, and looking back, I can't believe I've stuck with trading. I can't believe I actually ended up sticking with trading. The first 8 years were hell. I blew up 3 accounts. I'm always learning every day, but I freaking love this. Okay, and so hopefully you've seen the results. You know, again, if you're just getting on here, the results of my account this year, just to show you that I can trade in this kind of a market. My account at the beginning, at the close, was up 129% for the year. Now it's up about 135%. P&L year to date now is $1.8 million. I started with an account of just right at 7 figures. I do wire out money every month. My soft goal is to make over 3% a week, and then I wire out 2.5% every week. I track my equity every day, and that's just what I do. That's what I do in this environment, and it works for me. And so it does not mean that I know what's going to happen next. It just means that I will show you what I've learned that that works when the shit hits the fan. And although it seems scary, it does not have to be. We do have a trading room. I know a lot of you in here are in our trading room, and some of you don't know we have a trading room because you're new to us. So we do call out trades and market commentary in our trading room. We actually have push notifications that go straight to your phone. We've got this great app. You can be at work and says, okay, we're buying the spiders here, and you can trade from work and you know, on your mobile phone and stuff like that. We also post what we are hearing from funds and other people in the industry so we know how to protect ourselves. This isn't just about trading. It's about, guys, we need to go buy gold now. You need to get your money out of the bank. You know, the shit's about to hit the fan. These businesses are about to go bankrupt. Let's short the stock. That kind of stuff as well. And we also talk about when to be conservative and, more importantly, when to go for the kill. You know, is there a potential trade here that's going to really make your entire year? You know, we want to spot it. So hopefully you found tonight's information useful. Again, my goal here is to let you kind of give you a little understanding of what's going on. I think this is a lot more serious than a lot of people think. And let me show you the dollar trade. I'm going to show you the dollar trade. So I'm going to show you the specific trades I'm doing in currencies, but let me show you this real quick for those of you that are interested. Again, a lot of you guys in here are in our room already, so you're good to go. But I want to let you know we do have an options room where we post options trades. We text them out, push notifications. There's some futures, there's some stocks, there's some ETFs. The primary focus is options. It's a monthly subscription of $197. And for that, you get access to our real-time trading room. You don't have to be in it because we send the alerts. Also, you can listen to it on your phone. There's instant mobile trading alerts, daily actionable market insights. We've got a group of 10 of us over like 200 years of experience kind of walking you through all this. And it's a private online community for active traders. And I say it's private because we found that if we do stuff for free, you get a lot of weird people. This is a gate. For anyone that's not willing to pay that, that's awesome. Stay on the other side of the gate. If you're willing to cross the gate, you're going to become within a private community that takes care of each other and looks out for each other. If you would like to do this quarterly, I believe there's a slight discount, and you also get access to our trading, psychology, and money management course. If you would like to do it this annually, you'll get access to the psychology course and our new market internals class, which I'm going to do next Wednesday. If you're a current subscriber doing monthly and you would like access to these by just upgrading a quarterly or annual, just give us a call and we can take care of you. This link is simplertrading.com/alert. Now, what I want to show you is the specific trades that I'm doing in the dollar, okay? Any questions on this? And then I'll show you, again, the best swing trade I think of the next 3 months is going to be long the dollar. What are some low risk ways to play that? So I want to show you the specific trades I'm doing on that. And I just want to see if there's any questions here that I can answer. Yeah, I think crude oil is going to 20. Yeah, I think, again, I think a lot of these assets are going to continue to go down due to liquidity crisis and also due to the strong dollar. I think the dollar is going to explode higher here. So good question, is this useful for stock traders? So, you know, if we like say buy calls on the Qs, you can just buy the Qs. Is there something for small accounts? We do actually have a service just for small accounts as well. It's on our website, so it's just called Small Account Mastery. So we do have that as well. Gosh, there's a lot of questions, so I'm trying to see what's going on here. Oh, good question. So how do you think real estate will be affected? Well, what's interesting about this is that this is not initially a real estate crisis. So there's not a case here of crappy mortgages. I do think real estate will kind of pause, but it's not, we don't have a real estate bubble. What we have is a situation where some people may be laid off and may not be able to make their mortgage payments, and so that'll soften the real estate market. Believe it or not, I'm not anticipating a real estate market crash. The last 2008 was caused by a real estate bubble. If anything, this crash is being caused by too big of bets being placed on low volatility and too much money being wasted on share buybacks. So there's a shortage of cash. There's a shortage of dollars, basically. Yeah, student loans and car loans, it's a good question. I mean, I don't, so here's one thing I do know is that the governments of the world, they're starting to realize that they need to invoke confidence. They need to let the world know that they will do whatever they can to save the financial system. They are taking steps to do that. They need to do more, but they are, you know, they did the emergency rate cut of 1%. You know, they're the repo market, again, not to get too complicated, but that's a cluster, but they're providing liquidity for that. So they are willing at this point to fire all bazookas at this. They're not doing enough, and I think they're at a point where they're panicking, and they're going to keep doing more. They will do whatever they can to save this. I'm not saying it's a good idea. I'm just saying that they're going to do whatever they can to save it. REITs are trading way down. Yeah, I don't think it's the time to buy REITs yet. I do think, because think about it, shopping malls are all closed. You know, are they going to be able to meet their debt payments and stuff like that too? So is the live trading all day? Yeah, so in our live trading room, I guess that's a Freudian slip. In our live trading room, we're on anytime the markets are open. If the markets are crazy overnight, sometimes we hop on the mic there too. You know, we're answering questions, we're talking through trades, we're talking you off the ledge. Our goal with this is to help you, you know, just show you what we're doing. And again, we're not going to make money on every trade, but we've also seen this before where it's like we've learned how to take risks and not get in too much trouble. And again, you can see from my account that the trades are working. And, you know, it's continually being, and just kind of really studying strategies that'll help you guys. You know, I get kicked in the teeth regularly, but I also know how to position size. I know how to recognize opportunities with the goal of having a continually uplifting equity curve. Yeah, and for those of you that are already members, I recognize a lot of you guys in here. If you do want to just say, like, if you're monthly and you're like, oh, well, I want the psychology class, I would like the internals class. Yeah, you can just call in and say, yeah, I want to do quarterly, or just call, you know, just they'll take care of you guys. Like, this is not a, you know, there's no penalties here. So bonds are not the safe haven anymore. The U.S. dollar is. So bonds. So the dollar is the bond. Essentially, think of the bond as think of the dollar as the bond market. And again, I just want to answer questions here, and then I'll show you specifically the trade that I want to do on currencies here with ETFs. I'll post them in here. Oh, nice. You've been making, yeah, very good, Nicholas. That's awesome. Yeah, bonds are on meth. My problem is cutting losers and holding winners. Yeah, so believe it or not, it's a common problem. We talked through that. We were talking through today where we did a trade on the Qs and we made some nice money into the close, and a couple of people were like, oh, I panicked and cut it loose. And so we talked people through that. It's purely psychological. Your ego can screw with you. And so we talked through what we've learned. I mean, honestly, a lot of trading is psychological hacks. And, look, this is what we're doing. Yeah, and just so you guys know, this isn't a class. This is just like every day we're looking at the markets, we're commenting on them, we're sending out alerts. So if you trade full time, it's great because it's a community of traders. And if you're working, but you're really into trading, we send out alerts. You can actually still listen in on your phone if you want to, but we'll send out alerts so you know what we're doing at least. Yeah, so for this, the internals class, a lot of what I'm doing right now is reading things like the tick. The tick is driving a lot of my shorter term decisions. The ticks show you when there's essentially buy programs and sell programs. And so I'll just kind of go through and utilize that time to kind of show you how that works. Because if you can read things like the tick and a few internals, it'll kind of guide you through the ebbs and flows on this. Okay, so let me show you real quick. I think some of the cleanest trades on the dollar. So on the dollar, okay, so this is my trade in Zoom. If you guys want to do this, this is my only swing trade right now. So I've got the 105 April calls. Oh gosh, where's my thing here so you can see it? Yeah, so I bought these today, the April $105 calls. Now, you'll notice that these are $20. You might think, God, those are expensive options, but I just think of it as a cheaper way to buy the stock. I do go in the money. You can go out of the money if you want. I get it. That's but what I'm looking for ultimately is could Zoom go to like $130? Okay. So now, what's the way to play the U.S. dollar? I think the easiest way is on the euro. This is the ETF. I think the euro needs probably a little bit of a breather here, but we can go out to June, right? We can go out to June and get the $105 in the money puts for like $3, $4. Okay. So that's, that's insane. So to give you an idea, if you're new to options, let's say I wanted to buy one of these. Okay. All right, I'm going to buy one of those at $390. So the maximum amount you can lose on that is $390. And then obviously your upside is open. So I do think that ultimately the euro could go to like 90. And I do think this is one of the safer trades for a swing trade. Like this is just one of those things. It's a fundamental fact that the US dollar is going to go higher. And if the dollar is going to go higher, that's going to push the euro lower. The other thing you can do is UUP. This is the dollar index directly. Again, go out to June, give yourself some time. And, the $25, again, I always prefer the in-the-money options, $2.70. So you can pick those up. And again, just to put this in perspective, let's say you want to buy 10 of those. Your maximum loss on that, if it goes to zero, would be $2,790. Obviously, you do not need to hold if it goes to zero, but I think the dollar could go significantly higher. The other thing you could do is the British pound. That's FXB. And again, these are ETFs. You don't need to trade currencies or Forex or any of that. You can if you want to, if you've got experience with it. If you don't have experience with it, I do not recommend in any way, shape, or form that you decide to start trading currency, Forex, or futures tomorrow. This is way safer. The pound, I think, is also going below 100. So you come over here, great. The 115s, they're thin. That's okay. It's the price of admission. And so those are my favorite trades. So I'll post those here. So let's see. My favorite swing trades here are in currencies. And this is kind of what we do in the room. June FXE $105 puts. June UUP $25 calls. And then June FXB $115 puts. So I'll put those right there. If you guys are familiar with options, those are the trades right there. And that's kind of what we do in the trading room. When we have trading ideas, we just post them there and we track them for you. Once we get in, we're like, all right, we're in. If you guys have problems with them, you can ask us. We also obviously post when we're getting out as well. Yeah, the spread, well, and Chris, right now the spreads are wide because the markets are closed. But right now, all spreads are wide. Unfortunately, you can drive a Mack truck through most of the spreads out there right now. So what I recommend is you split the difference between the bid and the ask. And honestly, in this market, it's the price of admission. There's some nightclubs you go into and it's a $5 cover, and in some nightclubs it's a $100 cover. Right now, this nightclub that we're trading is a $100 cover, which means there's wide spreads. So that's just the price of admission. Just part of the deal, but the reason the spreads are wide is that the moves are huge. Yeah, easy on the FX traders. Yeah, so Debbie, just to be clear,